TV18 headquarters in Mumbai.
Good morning. Welcome to Morning Call. I'm Lata Venkatesh. With me, Sonia Shenoy, Anuj Singhal, and a lot of green on the screen, you will have to say. The rebound that we saw across, actually it started with the Chinese markets showing a very smart rebound in late trade. It followed up with India's monster rally, and then the European markets also ending smartly higher, and the US giving you again one of those mother of all rallies. It looks like the US markets after that long weekend were taking heart from the fact that the Chinese authorities could deliver what they promised in G20, that they could allay the fears in their markets either through direct intervention or through talking it up. But the point is, China is in control of the situation. It could be because of that, it could be just that markets had gotten deeply oversold and a rebound was anyway on the way, and we saw it in all markets, metals, currencies. You could see the fall in bond prices and the rise in practically every equity markets. But now I think the big question before all of us is whether the stage is set for a Fed rate hike. I mean, what was the excuse? Excellent GDP numbers, 3.7%, very good jobs data. Even if that 173,000 was a little short, it came on the back of revised numbers for June and July, revised higher, as well lower unemployment numbers, bigger jolts as they call it, job openings. Even that an important indication of how many openings will be filled. So the argument now for a Fed rate hike has just gotten increased. And what struck me is not so much in written commentaries, but commentaries around the world. One heard people saying that let's get over and done with the Fed hike. Yeah. No longer was there trepidation. There was a feeling, let us get over and done with. So it does look like the markets are now able to gather the nerves for that expected Fed rate hike.
And a lot of people do believe that if the Fed rate hike comes, and perhaps it's a good thing, it's an indication that the US economy is growing at a good pace, so we don't have to be that worried. Lata, morning. Anuj, hi, morning. And we were hearing comments from Warren Buffett in that interview with Becky Quick, and one of his famous sayings is, be greedy when the market is fearful, and that's something that domestic institutions have been doing. So even in the last couple of days, domestic institutions yesterday bought about, close to 450 crores in the cash market, and although FIIs continue to sell, but there was some amount of bottom fishing, bargain hunting, whatever you'd want to call it, in names like ICICI Bank, Axis Bank. So even though this market is volatile, there's still places where people want to be.
Oh yes, and there was an indication that people want to come in and buy, and we could see that clearly in the domestic institutions. But Anuj, yesterday for the better part you were shaking your head and calling it a dead cat bounce. Yes. Going by the manner in which all other markets have reacted, even if this is a dead cat, does it bounce much higher?
Morning, Lata. 2 points. First of all, Warren Buffett has $66 billion. So, he can
afford to stay.
Yeah, he can
stay
do that.
long
right,
when the markets are fearful.
Secondly, Lata, go back to what the morning commentary was, that the time to buy was yesterday. 20% money in the large cap. That was my morning call, that, the market has become so bearish that, and I still maintain it's a dead cat bounce, and I still maintain that it's what you're seeing right now is a bit of a short-term counter-trend rally. But then, you can make a lot of money in counter-trend rallies. Who stops you from making that money? So yesterday the call was to buy large caps, only large caps, and put 20% money. I think the call now is to sit on that and not do anything today, because today what you're going to see is a big gap up, and the market is likely to sustain that. Then the next investment call really would come if the Nifty takes out 8100 all the way there, because that would be an indication that we have put the worst truly behind us and we are ready to move on. Till then, the evidence of the recent fall should tell you that maybe as of now this is still a bit of a dead cat bounce. This is still a bit of a relief rally. Now, FI sold again yesterday, which was again on expected lines. We were discussing that in closing bell, 600 crores. But again, volumes were very low. Gross buy number of 3,000 crore, gross sell number of 3,600 crore. The FI number to look at this morning is the F&O data. Yesterday, there was quite a bit of index futures buying. About 800 crores of index futures were bought yesterday. Most of it was fresh long build-up. No cut in short positions. Fresh longs were added. And Sonia, you'll remember yesterday we were talking about the fact that yesterday there was quite a bit of call build-up. And don't be surprised to see FIs selling in index calls. Now, what does that mean? FIs sold 1,600 crores in index options yesterday with heavy call selling. The call selling took place at 7,800. 7,800 premium was 70 rupees, extremely high. In layman terms, what that means is that 7870 thereabouts is, for me, the peak for this current round of a short covering bounce. If the Nifty takes out 7870, which is 200 points from here, if the Nifty takes out 7870 and continues to trade above that for a day or two, then you can expect incremental short covering, which is going to be massive, which is not going to stop at 7,900 or 8,000, which is then straight away going to take Nifty towards 8,100 or 8,200. But that's still a long way from here. My sense is that first half today again is going to be a lot about large cap outperformance. We've seen a lot of big falls in a lot of large caps. You would see continuous bargain buying in some of these names, the likes of ICICI, HDFC, HDFC Bank, Axis Bank, all these banking names that may again lead the market rally today. If the market sustains today's first half rally, then you'll expect a lot of participation in the mid caps as well. That would happen in the second half. Normally, that's how the market moves. The first half is reserved for large cap moves, and once you get a bit of confidence in the market, then the second half rally really comes in. But just to reiterate the point, today would not be the time to take fresh investment calls. The investment calls should have been taken yesterday, as I said earlier as well. Today is the time to enjoy that mark to market. You'll see, there are times when you see a lot of mark to market losses and you suffer. Today is the time to enjoy mark to market profit as far as the index stocks are concerned. And the time to add would be if the market takes out, as I said, 7870, because that would give you an evidence that, okay, this market is now ready to move on from here and add to further levels.
But many fund managers may not have that luxury. I mean, they may not want to remain in cash when the market is at 7,600.
I'll tell you where things would change. For last many days, we've seen a lot of DII buying, and that's because, a lot of money was coming from domestic retail participants. In last 2 days, I've spoken to a lot of fund managers. Last 2 days, there was first indication of people stopping buying in equity markets. Yesterday, for example, there was not too much fresh inflows from domestic, in the mutual funds kitty. That has stopped a bit. The issue would be with the kind of rally that we saw yesterday and the kind of rally that we're likely to see today. Would there be a temptation to cut your losses? To see NAVs recover a bit, you want to cut your losses or to take minimal profit home? Would we see a bit of redemption? Redemptions also take place in a rising market. So that is something that I'll be watching out for from domestic fund managers' point of view. The DI data for next 2 or 3 days will give you an answer to that. If they keep buying, that means that there's still some more money which is coming in. But if they start to sell, then that would tell you that the
my conversation with fund managers gave me the impression that redemption calls were simply not heard yesterday. Okay. The impression appeared to be that yes, people were wondering whether they should stop their SIPs, whether the excess money we should question. But the positive point I got from, and I'm not saying I spoke to a huge number, the couple of guys I spoke to, the indication was that nobody is calling back their money. So perhaps we might see this 7780 being taken.
It may well happen, Lara. As I said, yesterday was a pure short covering bounce. No more, no less. Short covering can only take market this much higher. After that, you need fresh money. If that fresh money comes in and keeps taking the market higher, and at some point if it takes out 7870, that's, as I said, still 200 points, then I'm looking at the F&O positions of the FIIs, and then I'm saying that, okay, in that case, the call selling would start to yield extremely negative returns, and then you'll have to cover. Regardless of your view on the market, then you have to cover. If you've sold options, and at a particular price, if the market makes a move which is different to your position, then you have to cover. You are left with no other position or no other option but to cover your calls, and that is something that would happen. But for that to happen, you require another 200-point move on the Nifty.
That is looking at this market with, suppose a very shorter term, perhaps a 1 week or a myopic view. Yeah. But if you look at it for a slightly longer term, Anuj, at this point at 7600 on the Nifty, now there is a view that perhaps the bottom has not fallen out of global markets. markets. Of course, we still don't know what's happening with China.
Yes.
But is the risk reward now looking much more favorable than it was perhaps looking 2-3 months ago?
It clearly is, and that's why the call yesterday was to go and buy large
Put
caps,
more money
Sonia,
in, yeah.
20% money. Look, this market may still again go back and test the previous bottom of 7,500, and this market may well again go back and go below, say, 7,400, 7,300.
But
Maybe
you can never catch the bottom.
You can never
right?
catch the
Yeah.
bottom, right? So once that happens, that will be the time to deploy another 20 or 30% in the market. You should be ready to take 5 to 10% mark-to-market hit in some of these large caps. After yesterday's big rally and today's gap up, would today's gap up be a time to make fresh buy? My answer is maybe no. Maybe then you would wait for a bit for intraday retreat to take long positions.
All right, well, you'll get to hear and see a lot more on the show in the next 2.5 hours. So the Sensex has made a rebound after